My next guest is Nathaniel August. He's Mangrove Partners president and founder. Welcome. It's good to see you here.
Thank you for having me.
And you're the guy who comes on set and says, I love coal right now. I want to invest in Peabody Energy. So please, to all the people going, why in the heck do you think this is a good investment? Explain.
Well, look, coal is undeniably a cyclical industry, and Peabody is, in my opinion, the largest and the least expensive way to participate in the coal market.
Why do you want to participate in the coal market, which for years we've been talking about the war on coal, and granted, when this president came to office, he changed the tenor of that a little bit, but there's still a lot of difficulties out there.
That's undeniable that there are in the United States, but actually a majority of Peabody's EBITDA is coming internationally, and those markets are growing quite nicely. And so in our opinion, you can actually get the U.S. business for free if you buy Peabody today based on the valuation of the international business.
All right, now wait a minute. So you're telling me that the thing that Peabody benefits from is being an exporter, basically, of its coal to other markets. What happens amid all of this trade and tariff talk? Is this going to be the next thing that they decide to clamp down on or use as a bargaining chip?
So actually, Peabody is producing the majority of its EBITDA in its Australian operations. By our calculations, they should do roughly $800 million in EBITDA out of Australia this year after allocating corporate expense, and then another $600 million out of its U.S. operations. And the U.S. operations really don't export at all. They really serve domestic utility customers, and they actually sit at the bottom end of the cost curve. So they're the most competitive mines in the United States. But the crown jewel, in our opinion, is this Australian business, again, doing $800 million in EBITDA. And you can look at comps for Peabody's Australian business, and that could suggest that the entire market cap of Peabody is actually covered just by the value of this Australian business.
Well, don't tell, again, I mean, we're supposed to be America first here. You're telling me this is based in Australia, but their biggest customer then would still be China, I assume.
Absolutely.
So then in that case, if China is trying to clean up its smog problem and it knows that its grid is coal-fired and that electric cars are coming and they have to get better environmentally about that, how's that going to affect Peabody?
Well, actually, it's interesting that you bring that up because Peabody produces two types of coal in Australia. Its more important type of coal that it produces is metallurgical coal, and that's used in steelmaking. Steelmaking grew about 5% last year in China, and all signs are that that's going to continue to grow. And then its less important type of coal is a thermal coal that it also exports to China, among other Asian countries, as well as being used domestically in Australia. And actually what's been happening in China is that the country has been trying to decrease the coal production domestically and increase imports, because it's actually the mining and the production of the coal domestically which is so dirty in China and has created so many of the environmental problems there.
It's fascinating. So if they're more, if it looks better for them to be, exporting the metallurgical coal to China to make steel, you know what my next question is going to be. We're talking about a steel market that now maybe you can explain to us, how much steel is China making and how much steel do you expect them to continue making?
Well, look, Chinese steel production grew about 5% last year. It's grown steadily every year since 2009, and there are no signs that that's going to end as the company continues to invest in infrastructure and new buildings. China is not really a major exporter of steel to the United States because tariffs have been put on Chinese steel for a while now.
So that argument that they are a major exporter, but they're doing it through other countries, and that that's still going to be affected by the tariffs now, you think that's overblown?
I definitely think that's overblown.
So Peabody Coal you like effectively for that argument. There's a couple other places that you think in the U.S. are kind of unloved and overlooked, and that includes shipping and some of the exploration and oil production companies. I mean, oil is starting to look better again, up near and almost above $70 here. So can you be a little bit more specific?
Sure. So in the oil patch, our favorite domestic companies are Bonanza Creek, Penn Virginia, and PDC Energy. And what's interesting about Bonanza Creek and Penn Virginia is that both of those companies eliminated almost all of their debt by going through bankruptcy, just like Peabody did. And so you have a clean balance sheet for each of them, and they can both drill extremely profitably at current oil prices.